Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Tuesday, September 27th, 2016, and this is the Daily Report for Gold and Silver. We do have moderately strong pressure to the downside in the precious metals complex, with gold trading off about 0.75% and silver trading down almost 2% on the day. First, let's take a look at gold. $13.27 and change, putting it off $9-10 on the day. That, of course, is a spot market low, and the lows are important, of course, because we have stops in play at $13.24.80, and the high today, $13.39.51. When we move over to COMEX, $13.31, it is off about $13 on the day, almost a full percentage point. It's traded to a low of $13.27.70 and a high of $13.43.50. Silver under more than moderate pressure, as I said, down almost 2% on the day, 1.94, 1921, low 1904. That, of course, is COMEX. And then when we look, of course, at spot is at 1914, also off, but only off about 1.5%, with a low below $19 at $18.99. We are still fully in play on our gold trade. However, those stops in silver were hit today, and they were hit. We moved them up to, in essence, a push, so we wouldn't make nor lose money. But I had some real concern yesterday, and of course, that's going to be the primary focus or topic on today's daily report. Let's take a look at our first chart. So traders, strong sell-off in the precious metals markets. Gold closing off, basis COMEX about $13-14, currently $13.80, off over 1%, 1.03% at $13.30.30. Of course, we did enter a trade. We entered that trade at a pretty good price, at right around $13.17. In fact, it was this candle right here that we got long at. Felt really comfortable as this market moved up, spiked up the next day. And my sense was, or what my hope was, I should say, was that we were forming some sort of base. We did have two slightly higher days that would propel us higher. That obviously was not to be the case. And I also had some genuine concern that I wasn't seeing strong follow through. If you look at these last couple of trading days, yes, they were higher closes, but we weren't getting higher highs. We certainly weren't getting higher lows either. So it, to me, was significant that we could, in fact, be stalling. And that's the reason and the rationale that we went and tightened our stops to protect any kind of a loss and some profits. Now, we have our stop right here just below 13.25. We are in, of course, at 13.17. So we've got a little bit of profit that we have locked into this market. If you look at the low today came in at 13.27.70. Our stops are below 13.25 in COMEX. They are below 13.20 in the spot market. So we are still long our gold positions. We have locked in small profits on these positions. However, I am hoping that we find some sort of support in this area and get a bounce back. If we do, we remain long. If the market comes and genuinely trades into this price range, it will knock us out, but it will knock us out with a small profit. Now realize, when I say a small profit, even when we make $8 on a trade, when you consider, I always look at margin as approximately 10,000 for a 100-ounce contract of COMEX gold, that's still an 8% gain. So a small profit to us is 8 to 12%, and it takes place over a couple of weeks. That's certainly significant in the big picture, but we're taking greater risks in the way that we're trading, in that we're trading commodities as opposed to a one-to-one purchase of a stock. We have leverage working for us as well as against us. It's a double-edged sword. There's absolutely no doubt about that. Traders, my recommendation, obviously, we're very, very close. Market, as I said, closed at 30. We have a little bit of room. We'll see if the market and the stop holds. I'm not going to change it. If I did, I would be moving it up and getting out at the market. For those that are a little squirmish or want to maximize profits on the trade and are willing to give up the upside potential, and by the way, probability-wise, I think the potential that the stop isn't hit is probably at around 30-35%. So there's a greater likelihood that the market will continue lower with this kind of activity. Now, that's just straight probability. But for those traders, you got in at 17, get out at 13.30. There's no crime in taking a profit in these markets. Absolutely not whatsoever. So maintain your current long position, maintain your stop, or simply pull profits at the market, currently at 13.30. So although we are still long our gold position, traders putting on silver positions and moving their stop up yesterday did in fact get stopped out. But the key is here, the market is now lower than our entry price. Silver, in terms of our COMEX contract, we entered at 19.30. Yesterday we moved our stops to just below 19.28, whether you call it 19.27 or 26, got in at 30. Got out at 27, 26 in that area, a 4-cent drawdown, in essence, a push on this trade. But as I said on yesterday's show, we've really seen silver reacting differently in that we've seen a much harsher downturn over these last 3 trading days. Look at that particular chart, and then, of course, compare that to our COMEX, in which we had sideways activity and then the strong day down. So quite a different kind of trading activity that we have seen in this market. Again, maintain your current long position in gold or simply pull profits at the market, 13.30. Silver, we did get pushed out at we did get stopped out with a push on the trade, excuse me. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.